We've come to acquaint you with recent developments in our fiscal management space, as well as our macroeconomic developments. So there are three main things that we'll speak to this afternoon. And the first one is, if you check on the IMF website today, you will see a press release indicating that they and us, that is the Liberian Financial Management Authorities, i.e. Ministry of Finance and Central Bank of Liberia, have reached what they call staff level agreement, which means at the management level of the IMF, we have agreed with them to resume the extended credit facility. So what is left now is for the management to take the proposal for this 40-month or 3.5-year project, financial management reform project, to the board of the IMF, which will meet on September 25th. Now, what is the ECF? What the ECF does is it provides, as the name indicates, credits to bridge financial gaps, to close financial gaps. And some of these gaps, for example, are the central bank reserves. The central bank reserves are used for two main purposes. One, to keep the financial sector stable. All the commercial banks, at one point or the other, they run low on their own reserves. And the central bank can give them short-term facility until they rebuild their reserve and pay back. All of us here almost have a bank account. And you will not want to wake up one day and hear that your bank has closed. And you know what that means for you financially. So the extended credit facility will ensure that the central bank has sufficient reserve to stabilize the financial sector. And another benefit of the ECF is to support our balance of payment. Liberia is a country where most of our commodities that we use in all categories, whether consumables or non-consumable commodities, are imported. You want to talk about rice, you want to talk about petroleum, all the clothes that we are wearing here are all imported, and even all your gadgets. And these have to be funded with foreign exchange. Business people who bring in these goods need to acquire foreign exchange. And they have to get it through their banks or other business transactions. So the foreign reserve, which will be supported and buttressed by the ECF, will help us to ensure that we have regular amount of foreign exchange to finance our international payments, whether it's financing imports or international transactions like our debt payment to other institutions, and etc. And also, on the macroeconomic front, it will help to stabilize our exchange rate. Because once it is known that there is sufficient amount of foreign exchange for the central bank to use in intervening in the financial sector, it will be very hard for business people or other individuals to go on the black market to look for US dollar, which thereby drives the exchange rate up. And when the exchange rate goes up, it goes up with inflation, because the cost of imports become high, and therefore their prices in Liberian dollars also becomes high. So that is one important benefit of the ECF. How did we get here? I will say briefly. So in December 2023, then President-elect Joseph Yuma Boakai asked that he wanted Liberia to re-engage with the fund and to resume the ECF program, because it was started in 2019 under the previous administration. And in this room a few weeks ago, someone asked me the question about the inflation and other things. At that time, between 2019 and 2022, when the ECF was in place, our exchange rate was stable, inflation was low. But in 2022, when the previous authorities failed in meeting the requirements of keeping the program going, the program was suspended. In fact, it collapsed. And we saw exchange rate going up, we saw inflation rate going up, we saw import prices rising. So in February, the IMF fielded a special mission, an assessment mission, to come and engage with authorities of the Ministry of Finance, the CBO, and other key institutions of government. And it was agreed in our assessment meeting that yes, the country will be ready to resume the ECF program. And so all the documentations were prepared, we exchanged the necessary information and data, and in July, a full-fledged negotiating team came to Liberia, actually June 29th to the 5th of July. And that team spent, I must get it right, June 25th to the 5th of July, 2 weeks in the country and discussing with all of the key stakeholders, including the president and some key members of the cabinet. And it was agreed that all the necessary formalities were almost in place with few outstanding issues. And what were some of the outstanding issues? Let me just list them. On the fiscal side, they wanted us to recast the budget because from our own assessment, as at the end of June, the revenue forecast towards the end of the year were going to be less than what we budgeted at the beginning of the year. So in order to do so, we needed to rebalance the budget to make sure that there is a match between revenue and expenditure. So recasting the budget was one fiscal requirement. And another one was to identify ways and means that we can finance the revenue shortfall so that expenditures will not have to be cut. Because at that time, in the middle of the year, when ministries are still more or less in transition, preparing for the implementation of the arrest agenda, it will be distorting to have a reduction in expenditure. So we needed to find means of closing the revenue gap. And the third was to identify some ways of financing our domestic debt. Because all of you remember, at the passage of the budget, there was a drastic reduction in domestic debt, which affected the stability of the various banks for which government owed various debt instruments. And it also affected the ability of the banks or contractors especially to access credits from the banks to finance critical projects. So part of the recast process required raising the amount that was allocated for domestic debt by almost 100%. So those were the three cardinal requirements on the fiscal side, which were all accomplished. As you remember, the minister mentioned we submitted a recast budget 2 weeks ago. Yes, a copy of it is now with the legislature. When they resume this week, this is going to be one of the key national issues that we'll be discussing. And in the recast budget, all the adjustments to the various critical lands have been made, and it's now before the legislature to deliberate on. Then on the monetary side, there were issues about credits extended to various commercial banks, some of which you are familiar with in the media, 2 banks, and the issue was whether or not the CBO acted legally in the context of their own act and the rules that govern those kind of transactions. So to all intents and purposes, negotiations are still ongoing between, on the one hand, the CBL and those 2 banks, and then between the CBL and the MFDP. Because at the end of the day, the CBL is the government's bank. When they have difficulties with their reserve position, the Ministry of Finance will be compelled to support. All banks can fail, but the central bank of any country should not fail. So that conversation is ongoing. But what has accelerated the process to bring us this far is the fact that the president took decisive actions with regard to changing the management of the central bank. So our colleagues at the front, the IMF, were concerned whether the management team then were really committed to undertaking the kind of radical changes or radical reforms that was needed. not refund as to changing anything, but simply putting the bank back on track in performing its legislated duties, functioning as it was meant to function. We've heard the other report, we read about it, where over-the-counter transactions exceeded 170 plus millions. No central bank does that. And then the next thing was to review how the central bank supports and supervise commercial banks generally. So in the case of one of the banks, SRB for example, the CBO is going to tighten the management, not take over the bank. No, they're going to rather do more closer regulatory supervision of the bank to ensure that decisions taken at the bank do not run contrary to the procedures required for the functions of the bank. So, what needs to be done now with respect to the next step forward, having reached the staff level agreement? So, the Ministry of Finance representing the government, the Ministry of Finance and the CBL representing the financial governance of the country, we have to submit a formal letter requesting for the resumption of the program. And this is a letter that will be taken to the board on September 25th for approval. And then there are various technical recommendations which are mainly related to the functions of the MFDP and the CBL that we've agreed changes that have to be made. And I must tell you also, while the two entities will be leading, there are requirements for other institutions of government that kind of underpin the PFM process that we will be coordinating as well. The details are too numerous, we don't want to bore you with that. And then just a few items, the ECF. What will it benefit the country? I highlighted the monetary aspect, for example, supporting the reserve positions and facilitating our international payment and stabilizing the exchange rate. So one of the things that going to happen is it more like restore or improve our credit rating in terms of our ability to do prudent fiscal management. Because agreeing to the terms of the ECF signals that both the Finance Ministry and the Central Bank of Liberia are ready to undertake financial management in a way that is responsible, in a way that is prudent, and in a way that is judicious. Judicious means consistent with the legal principles governing those two institutions. So once you do that, you open the door for direct budget support, you open the door for low interest concessional loans, you open the door to other non-financial technical cooperation, because our partners out there will begin to see that, oh yeah, there are serious people in charge. There are serious people who are ready to manage their own resources well. So therefore we can trust them with our own resources, with our resources. The second one is that it provides opportunity for external support to the implementation of the President's agenda, the arrest agenda. As you know, we've already concluded the national and local consultations. The drafting of the plan is now in process. We are expecting it to be ready to be linked to 2025 budget so that expenditures will be in line with the plans for 2025 to 2029. So the ECF program provides resource opportunity for that. And in addition to the supporting the financial sector, it also provides, remember I said, to bridge financial gaps. There are economic potential in the country. Local and international investors who want to venture in any of this arrest agenda, for example, whether agriculture, whether road, and other economic ventures. The facility under the ECF can be used by the central bank to facilitate medium and long-term credits into viable economic projects that will make returns to be used to replenish whatever will be used. So in a way, in addition to financial management improvement, it also helps to tap into the potential of the economy. And it also helped to increase our allocation with other financial institutions. You hear about the International Development Association. We'll talk about the issue later on, how we defaulted, quote unquote. Allocation from the African Development Bank, from the International Finance Corporation, and other institutions that lend low interest loans or give grants. This project, this program will increase the allocation that Liberia has in this institution. And like I mentioned, also donor confidence. It improved donor confidence. Now to the debt, and to this I will just speak to it broadly, and my colleague, Mr. Zuo, will give you a bit more details, and he's in charge of debt management. Now the issue of debt, did we default? No. Again, as Minister Pia mentioned, we are still confronting legacy issues from the past. In addition to over-the-counter transactions, when the Central Bank of Liberia or any country makes international transfers, it should not be to my personal account. If it is to my personal account, it should be legitimately authorized. Maybe I'm on a foreign tour and I will be there for a while and I have to set up an account to do all my transactions in. But not to my family, not to friends, not to purchase my cars or any commodity abroad. So previously, we were making transfers throughout the week, Monday to Friday. And through that, we could make transfer to our embassies abroad, make transfer to our creditors as we settle the debt on a periodic basis. But because of the irregularities at the Central Bank, the Federal Reserve Bank of New York, which is the CBO's corresponding bank in the States, restricted the transfer window to 2 days a week, Friday and Wednesday. So what that means is that the due dates for certain payment, even if we have the cash, sometimes may not coincide with the transfer date allowable. And I can give you an instance where the Controller and Accountant General, Mr. Nettie, actually captured the picture of a check that was ready to be paid to one of our lenders. He sent it by screenshot to the country manager. And they said, no, what they are interested in is a SWIFT code. Unfortunately, that was not on the transfer date. So when people go around, say the government of Liberia or the finance ministry defaulted, you got to be better. And to be frank, most of you here were colleagues at a certain point in the media. You are not doing what you should do. The Minister of Finance is there on Broad Street. There is a media director of Patience. You all know. Capturing information on Facebook and publishing it is not right for this country. The last time I was here, I talked about something called the signaling effect. Certain information, when it goes out, the economic implications is worse than you think. International economic issues or even domestic economic issues, you should have the fact. Conveyors of wrong information are equally guilty of whatever consequences it causes. We didn't default. We are on time with our payment. And secondary information that you need to know, the over 45 million that we are paying in this year, more than 50% of that is for debts that were scheduled to be paid in 2023, but were not paid. Allotments were raised, vouchers were raised, and they didn't pay the debt. Because the creditor, all of us, if you have a loan with the bank, you have monthly schedules for payment. So all the payments, or most of the payments that were scheduled for 2023 were not paid. The 45+ million of this year, 23 million are for what was to be paid last year. So who defaulted? Not us. You know who defaulted. Finally, okay, we already talked about the recast budget, and probably Mr. Zoe can just take 5 minutes to briefly talk about any issue on the deadline they didn't cover, a big old detail. But before I step down, we invite you. Patience is here. I know her. You'll be visiting us and get a fax. Thank you.